Here we go. So we're going to be looking at the weekend market gap, President Trump tariff announcements, and the European Central Bank recent decision. And it's all over. The US dollar is king again. That's the topic. That's the how can I say, the title for the video today. Okay. As we seen, we did had some big movements over the weekend, especially on the US dollar index. We're going to be covering that later on. But yeah, as always, if you guys have any questions, please just send it over to me in the chat. And as soon as I have some time, I will be looking to address those questions for everyone. So before we go any further, guys, I will be putting the risk disclaimer up. Please, I will give it a minute so everyone can read, understand, and then we go and actually start the webinar. All right? Cool. Right, cool. I think everyone had time to read it. So let me just take this off. And let's go to here. I'm going to use FinLogix. I'm going to send the chat. I'm going to send the link on the chat so everyone can follow me up with FinLogix. FinLogix website. There you go. So FinLogix is a free tool. It's made by ACY Securities. It's a sort of a sister company from ACY. And we have lots and lots of features that are free, completely free. You don't have to do any payment to be using it. So going to the chart, let's start with euro dollar first of all. I think that's the major one. So that's a 15-minute chart. And what we have here, it's insane. Okay, so we were trading at levels of 103,600, pretty much 103,600 on Friday close. And then as soon as the market opens on Monday morning, we saw a whole gap of pretty much 1,000 points, so 100 pips from last Friday's to this Monday, so yesterday's open. Of course, as we all know, the market always tends to close those gaps, if not immediately, most likely within a week. Okay, so in this situation, we pretty much covered all the gap. Let me just double check that. So from here, yeah, we're very close to close up all the gap from last Friday to this Monday. And there's always reasons, okay? So over the past weekend, as we've just been, the Forex market has experienced some very huge gaps that I haven't seen in a while, especially pairs against the US dollar. So Aussie dollar against US dollar, New Zealand dollar against US dollar, not USD JPY. USD JPY held very, very strong because there's no much influence over tariffs. But that's something we'll explain later. So for now, we've seen a very notable gap on the Forex market. That was characterized by a sudden and significant price between Friday's close to Monday's open. So for those who don't know what a gap is, it's basically a difference price of where there is no price in the middle. There is nothing happening here. Gaps can result from various factors like geopolitical tension, economic data releases over the weekend, or even expected policy announcements from central banks or etc. So in this case, wasn't different. So the market gap was primarily driven by the President Trump unexpected announcement of new tariffs. And these types of market gaps, they can often lead to very high volatility the following week. So let's say we had this huge move happening on yesterday. So we know that from now on, we're going to have some sort of volatility. May not be right on Monday, but it will definitely be throughout the week. Okay. As we all know, that I think for those who have been at least somewhere around a year and a half on the market would be noticing some gaps. It can happen as well on not only over the weekend. Okay. It can happen as day to day. So it can happen like if NFP comes out much stronger than what was expected, a gap can occur because the price sudden changes so high, so quick that there is not filling. There's no orders to be filled into that price range. Okay, so the sudden price, you guys have to be careful with those things because they can trigger stop loss orders very quick, and this can further increase the volatility, and when you understand the underlying causes of the gaps, it's crucial for developing effective trading strategies and managing your risk accordingly. So basically, if we go through the President Trump tariffs announcement on Friday, President Trump announced the imposition of immediate tariffs. So what does that mean? Is basically he's saying, look, from now on, from the second right now on, we're going to be having 25% tariffs on Canada and Mexico imports. Okay, so basically 25% on Canadian and Mexican imports and 10% on Chinese goods. So from the single second that he signs that paper, it's effective. Okay, lots of people were like, oh yeah, but that can't happen, man. Like, what's going to happen? Yes, it can. All right, and it happened. So this move pretty much aims to pressure these countries that I've just mentioned, China, Canada, and Mexico, and regarding the trade practices and other concerns that they've been imposed. However, it risks igniting a trade war. Okay, at least in my opinion, as affected countries, they may respond with their own tariffs or challenges through the world trade. So the former Secretary of the State, Mike Pompeo, supported Trump tariffs strategy, and he emphasized pretty much the protection of the American interests and asserting the tariffs as a tool for economic and the national security. In response, Canada vowed to retaliate with $106 billion worth of tariffs on American products. Mexico indicated similar measures, but I forgot the name of the president of Mexico. I forgot his name. Anyways, he posted on Sunday that he, after a good chat with my friend Trump, that's what he said, a good chat with my friend Trump, we're going to be looking to postpone the tariffs. I mean, there's no much, sorry, I forgot her name. Anyways, I forgot her name. He was like, after a good conversation with my friend Trump, we've been into an accordance of postponing for 30 days of the agreement into Mexico. That doesn't change much, in my opinion, because it's just like when you have a flu, right? When you're very bad on flu and you've took like you've drank 2 liters of orange juice and you've done everything you can possibly can, and pretty much nothing is happening, but it helps you at that little day, that little few hours, that day of the week. But tomorrow the flu will be back and you need another shot, and it goes like that and goes like that. So basically that's what happened on Mexico at the moment, because yes, they had a good chat, but what's next? Again, tariffs. So after 30 days, boom, 25% tariffs on that. So nothing changes, okay? Critics are arguing that the tariffs will increase the consumer goods prices. That I think that's true. But Pompeo was dismissing inflation concerns. So he's saying that asserting that Trump's approach could manage it better than the previous administration, that they've tried to do already. So there's some goods and bads about the tariffs, okay? So bad thing is that, the good thing is that basically what Trump's trying to do is he's trying to promote US better, okay? So let's say you run a country, and you have some trade partners, Canada and Mexico, let's say, Brazil, let's say, right? So Brazil have one of the biggest, if not the biggest, export of coffee in the world. I think Brazil counts of 56% coffee production in the whole world. That's a lot. And on your country, you produce coffee as well. Let's say you're from Australia, and we produce coffee here as well, right? We do have coffee here, but we're buying a lot of coffee from Brazil, and we're spending money to buy those coffee to be selling to us when we could be using our own coffee. So what would we do? We would increase even more the prices so people don't buy from them and buy from us, from made in Australia and not made in Brazil. You know what I mean? Because yes, we would be helping us into the economy if we buy from Brazil, but we would be helping 1,000 times more if we buy from our own economy, because the money keeps in here and doesn't go anywhere, right? So that's what Trump is. I'm gonna dive deeper, a little bit deeper on that later, but that's pretty much what happened. So the market reaction, of course, to those announcements was a very sharp decline in equity markets, because, as we all know, investors are fearing the potential for a prolonged trade war, and the currency markets, the Forex market, also experienced some significant volatility, as we saw on the US dollar, initially strengthening against some major currencies, and after reversing the course as the concerns about the broad economic impact on the tariffs took hold, as I've just mentioned to everyone. So if I go and open, let me just get the US dollar index so everyone know what I'm talking about. Unfortunately, we don't have US dollar index in there, but there you go. So we had this huge gap on the Monday open. So from here, around 1% gap, we had all the move up and then all the move down. So now I can do that better. So from here all the way to here. Yeah, 0.75%. So 0.8% gap into Monday open of the US dollar index. And then we had a whole reversal trend back again from the top of 109, pretty much 110, down to close up the gap 1.4%. And we did fully close this gap, as we can see right here. Okay, so that's good. But as I know, and as I predicted, we we would come and close all of these gaps. And I've made a video yesterday talking about that. If you are not following us on the YouTube, you should be following us because you're losing a lot of content. But anyways, so what's the potential 10% tariff on Europe that everyone is talking about? Because if we look to euro dollar, okay, actually, let me just show US dollar CAD first. So we had this huge gap here as well. US dollar Chinese yuan, we had this gap here as well. We did had Aussie dollar as well, because China is related to Australia. So therefore, we do have gaps. It's about 15 minutes over here. There you go. We had this gap and then a continuation down. I was short Aussie dollar, I was long US dollar Chinese yuan, I was long US dollar CAD, and I was short euro dollar. All of my positions have been closed up to now, and I'm waiting for more pullbacks and confirmations to open more positions, okay? And of course, US dollar Mexico pesos as well that I've been mentioning about. USD and XN. Okay. I'm actually long on US dollar Mexico pesos now because of the close of the gap, but that's my personal portfolio. It can probably come a little bit down, but I mean, market timing is it's ridiculous. We shouldn't be looking to market timing, okay? Because like market timing is not professional. Market timing is stupidity, to be honest. You're trying to catch that little lag that will, boom the other day. Like, forget about it. Market timing is one of the most hard things in the market, right? If you think it's hard building strategy, my friend, it's even harder to market time. Professional traders don't market time. They wait for a trigger. When the trigger is there, they enter the market. That's all. Okay. If you're trying to, that speculate a little bit of the 1 minute, of the 30 seconds chart, of the 5 seconds chart, of the 1 second chart, of the 1 millisecond chart, forget about it. You're losing time. Okay. That's the truth. And if you don't like me for that, that's fine as well. Keep doing what you're doing. So, that's why a lot of people can't go ahead because they're always trying to catch the perfect leg, okay? Don't do that. It's not nice. Anyway, so most likely we will continue to see a uptrend on US dollar Mexico pesos. Now, there's a thing here that I want to talk about is the potential 10% tariff on Europe. Okay, there's a 10% chance tariff on Europe, and of course that will affect the euro dollar, and that's another trigger, okay, to short euro dollar. So looking ahead, there's a speculation about the possibility. Listen again, it's a speculation and it's a possibility. I'm not saying it's going to happen. It's a speculation of a possibility, okay, that President Trump will impose a 10% tariff on European goods, such like move cart. If they do that 10% tariff on European goods, such a move like that could have very, very significant implications for transatlantic trade relations, because there's a lot of ships that comes from Europe to US from the canal. Okay. So the European Union has been very critical trading partner for the US, and imposing tariffs could disrupt a supply chain that they have created between both of them that supplies the whole world pretty much. Increasing those costs by 10% for the consumers and business, and potentially will lead to retaliated measures from European nations as well. The prospect of the tariffs on European goods, they have already led to very increased uncertainty to Europe, to euro in the whole market. But business that rely on transatlantic trade and they are reassessing the supply chains and they're trying to explore alternative sourcing options. The potential for retaliatory tariffs from Europe could most likely further escalate tensions and create additional headwinds for the global economy, in my opinion. Okay, so I do see euro dollar below parity. Okay, euro dollar below parity for this quarter, most likely to happen. All right. Now, is that really good? The tariffs? As I was mentioning before, there's a good and bad aspect of the tariffs. Okay, so they're sort of the double-edged sword. In one hand, they can protect domestic industries from foreign competition and potentially leading to job preservations and the promotion of local business, as I mentioned. And as we all know, this protection can be particularly important for industries that are struggling to compete with low-cost imports. But on the other hand, the tariffs can lead to very high prices for consumers, strained relationship with trading partners, disruption in global supply chains, and inflation. There's announcements, the recent announcements from the countries that have been suffered from the tariffs have really led to increased tensions, Canada and Mexico, both of which have signaled intentions to retaliate with their own tariffs. So basically what are they trying to do is they're trying to shoot back the US. Most likely they could, they can do that. It's not a really problem on doing this or not. But the problem here is what they would do, how much they would do. And then that's going to be a trade war. And again, that's a big problem. So the long-term impact, we have to look at the underlying impact, the long-term line of the tariffs on the economy is very complex and depends on a lot of factors and not only in one factor, including the response of trading partners, the ability of domestic industry to adapt to this new world, let's say, this new era, and the overall health of the whole global economy. While the tariffs can provide the short-term protection for certain industries, they can also lead to long-term economic inefficiencies and they can reduce the competitiveness. So it's a good and not good. It's like it's a 50-50. I would say it's more like a 60-40, 60% bad, 40% good. Because yes, you're going to have more jobs. Naturally, the NFP will most likely have more jobs coming up. We're going to be having stronger US, an underline on house, on shelter costs, oil prices as well, etc. But yeah, that's pretty much my opinion into that topic. Okay. Now, second topic. Let me just come back here. So we've talked about the weakened market gap. We've talked about President Trump tariffs announcement. And the last topic would be the European Central Bank's recent decision. So we know that the shifting from the US to Europe, the ECB recently decided to lower the 3 key interest rates by 25%, by 0.25%. That means 25 basis points. And the interest rates on the deposit facility, the main refinancing operations and the marginal lending facility were decreased to 2.75% from 2.99% and 3.15% respectively, effective from last what day is today? Respectively from tomorrow, from 5 of February. Okay, The decision reflects that the ECB assessment of the inflation outlook, underlining inflation dynamics, and the strength of the monetary policy transmission. Despite the rate cut that the ECB did, the ECB continues to express confidence in the inflation outlook and the economic recovery. Okay, so ECB decision to lower the interest rates is part of a broader strategy to stimulate economic growth and the recent economic downturn that they had. Lower interest rates can be very encouraging to borrowing money and investments, but it can boost consumer spending and as well support the job creations. However, they can also lead to lower returns for savers and increase risk in the financial system. Okay, so we had a kind of interesting thing on last week on the ECB, because during the press conference after the rate decision, Lagarde addressed the potential risk for economic growth. Right? So she highlighted that greater friction in the global trade could weigh on the euro area growth by the pending exports and weakening the global economy. So lower confidence pretty much could prevent consumption, of course, and investments as well, on the other hand, from recovering as fast as the ECB was expecting. Okay, so geopolitical risks like Russia actions and conflicts in the Middle East, they were also noted as a potential disruption to energy supplies and the global trade from ECB. So Lagarde tone was, I would say, I don't want to say that, but I think that's what I felt. It's more like caution's tone, like an optimistic cautions. Okay, she acknowledges that the challenges facing the euro area economy, but she always also expressed the confidence in the ECB ability to support the recovery. As we all know, her comments, provide reassurance to the market. She tries to be a moderate recovery in European equity markets and try to stabilize the euro against the major currencies. But, my friends, I think short euro would be the best option on pullbacks. Okay, so in conclusion, pretty much the whole recent developments in the tariff and the monetary policy, they are showing to us a very complex interplay between Europe, US, Canada, Mexico, Japan, China, all of those countries around. And we all know that investors as well as stakeholders from company, it's very crucial for them to be informed on those decisions. And not different from you guys, traders. Okay, so make sure to be always following the latest news as possible. We have like FinLogic's economic calendar here, so you can come into tools and then come into economic calendar. I'm going to send the link to everyone. Oops, sorry. Get the so it's on the chat, so you can always access. It's free right away, straight away data. Okay. Now, what I'm looking at, we saw that gold had a huge move yesterday. So gold, let me get it here. I think gold is a potential that we could most likely be looking to trade long. Okay, so I missed my entry on this part, but I was looking to trade long on gold until $3,000. I think for the month of February, I would be looking to wait. It closes negative. So February is, let me just check this off from here. So month of February started here. So the month of February open is right here. And most likely we're going to close somewhere between below the open. And then I would be looking to long for March, April, because that's when Mexico will have the actual imposed tariffs. China will most likely increase the tariffs and equities will go crazy. So investors will try to seek safe haven, and I will be looking to long gold as well. Okay, so I think real money will be coming. Now, NVIDIA, there's a lot of retail flows coming in, and I'm looking to short NVIDIA. Okay, so we had this little move, sort of consolidated move. I'm waiting for a better pullback to continue to short NVIDIA, but I don't have any target in mind. Stocks are different because, as you see, there's like huge gaps, but they take a while to get there. So most likely we will be looking at a short NVIDIA soon, and then a long continuation of the trend. Okay, so that's pretty much it from me today, guys. I hope you guys could understand everything what was happening over the weekend. That we have the announcement of the President Trump on last Friday, close of the market, and then we had the tariffs announcement, and now we have a sort of optimistic ECB. But I'm looking to continue to short euro and long US dollar basket. Okay. Hopefully everyone had a good one. And I see everyone tomorrow. Same time, same channel. Thanks, guys. Have a great week ahead, and I talk to you tomorrow. Bye-bye.